Hi, folks. Dan Bird here with the Daily Scan. Sorry I wasn't around on Thursday or Friday last week. I was at the Money Show and learned lots of very interesting things, in particular from John Carter, which I will share tomorrow on Technical Tuesday because I have to do this one quick tonight. It's actually before the market closes. It's about 3:10 on the East Coast right now. So we've got about a little less than an hour left. I'll take a look at what the market looks like and go from there. But real quick disclaimer, I am not a financial planner. I cannot give you advice or make recommendations on what to buy or when to buy it. Any buy decisions that you make should be determined by your own risk profile, your own trading style. And of course, you need to take responsibility for any trades. If you do decide to use a financial advisor, I would recommend you go to this website right here, Investor.gov, which you can find on the homepage of my website, and check them out to make sure they are reputable. So that's where we are today. Let's go take a look at the market where we are so far. Again, as I mentioned, it has not closed yet, although I have updated the market bias. Oops, let me refresh the screen here. I did update this for today. You can see 12.9, even though the market's not closed. Most of it, I don't think too much is going to change between now and 45 minutes. So you can see we had a down day last Friday, and then today kind of a sideways day. I'm going to show that to you in a second, show you what may have happened. But actually, why don't we go ahead and do that right now? So if I go to the market bias page, this is the current one. So these are highlighted whenever they change. So you can see the ones that change from bull to bear today. Industrials, real estate. These are the short-term, medium-term, and long-term columns. And then we have insurance down here, switch to bear, cotton, switch to bear. We do have transportation outpacing utilities today. And we got a long-term signal, up signal on mid caps, interestingly enough. Now, those long-term signals usually take a while. So we'll look at that in a second. Silver actually looks like it's perking up. So silver gave a short-term up signal, and silver miners gave a medium-term up signal today. Lithium also perking up. Got both a short-term and a long-term on the same day. However, uranium went the opposite direction. So let's take a look at these right down here. We'll start with gold. Gold starting to move higher, and you can see gold right now. Probably if it continues this way, it probably will give a short-term up signal on Tuesday, tomorrow. So almost there, not quite, but it looks like it's trying to recover. It's looks like a new higher high. So that's good news. Gold miners kind of look similar. Could give a short-term up signal. It does have a shooting star candle today, which is a reversal candle usually, but it needs confirmation for the next day. So we'll see what happens. Silver. There's the short-term up silver. Silver actually closed so far. We've got 50 minutes left, but it looks like it will close above its 50-day moving average. So silver looks like it's going to renew an uptrend. Silver miners already had started. Back here was this short term. Today got a medium term up signal. Also reversing candle there. So we'll have to see if it confirms tomorrow. Steel continues to, it had a little bit of an update today, but continuing going down. Copper, close to getting an up signal. Lithium, here's lithium. Both a short and a medium term up signal on the same day, and very nice candle. Looks like it's in rally mode right now, so lithium might continue to move higher. Big, huge run back here in September, and might be starting to go higher again. So lithium looking good. Uranium, the opposite direction. Like I mentioned, big red candle today. So it actually closed below its 50-day moving average. So uranium is going the opposite direction. So that's not a good sign for uranium. What else do we have? We look at XLI, industrials, short-term down signal today, and a series of down candles. So this looks like it is definitely heading much lower. We'll see if it stops here at the 50-day moving average like it has in the past, but if it doesn't, and that could go through that tomorrow, then that will definitely be a bearish signal. Um, all right, so let's take a look now at go back to the home page, and we'll look at the indexes first. So S&P, and you'll notice something in these as well, I think, when you look at them. So far, the total market trend is still higher. So short-term, medium-term, long-term bullish. So it has a green light still. But if we look at the S&P, you can see right there, starting to roll over, just beginning. So this is a 1-year chart, and this is the 6,000 is the Fibonacci level, Fibonacci retracement level. So 6,000 is right almost where the uptrending 21-day moving average is. So we'll have to see if that's going to act as support right there, like it has in the past. If it doesn't, that will not be a good sign. By the way, this is the worst, usually the worst week of December this week. So not surprising that the market's pulling back for a number of different reasons. Next week, we have CPI Wednesday, and so that's going to be volatile. And next week we have the Fed meeting, and we also have options expiration next week. And next Monday or Tuesday, I'll talk about max pain on options expiration. We'll see what the implication is for direction in the markets. But there's the S&P. Here's the NASDAQ. Also rolling over. Actually gave back 2 days worth, almost 3 days worth, sitting right above the gap support right now. So hopefully that's going to hold. If it doesn't, if it gaps down tomorrow, that will be definitely a negative look, because that will be a island reversal. It's when a series of days it gaps up, and then a series of days goes sideways, and then it gaps down, leaving those kind of on an island up there. That usually is a pretty strong reversal when that happens. So again, the 21-day is right down here. It's moving up towards the Fibonacci level. So all of that, still the market really, even though it's gone down today, it's really hasn't broken. So the Dow looks a little bit worse. It's sitting right on support right now, and the 21-day is a little lower than that. So that one actually could continue lower for the Dow. And then, of course, Bitcoin. See how Bitcoin did. Big down day for Bitcoin today as well. Good look at this on a closer in basis. You can see right there. Bitcoin, the 21-day is right below where we ended. Right now, we are at let's see. We're at 315 right now. So we got about 45 minutes left to go, and right now it's at the bottom of its range right now. So if that continues and it doesn't reverse at the end of the day, which it certainly could, then it's going to be sitting right above the 21-day, and that's a point where sellers likely could come in. So it's basically hit this 161 Fibonacci level over here, 102.5. You can see it just touched it right over here, went above it the day before, but hasn't really been able to close above it. So that's usually the area where there's lots of resistance and it may continue to trend lower. The momentum looks like it's heading lower. So we'll have to keep an eye on that. One thing that I did learn from John Carter when he did his presentation, he showed a chart, and I have now duplicated that chart. He showed it in Thinkorswim. So I've duplicated it in Thinkorswim using his squeeze. And the squeeze I covered last Technical Tuesday, last Tuesday. So if you're interested in understanding what that is, I now have a playlist for all the Technical Tuesday videos. You can just go back to last week and watch the squeeze. So where did I put it? I think if we go to the charts page and we go to indexes, right on this button right here, these are updated every week. And I will now update this chart too every week. So this is what the momentum indicator for the squeeze looks like, and the squeeze of these dots down here. This is a monthly chart, going back 5 years. So the reason this is important, and this basically is what John Carter showed, and he talked about this back here in 21, and I mentioned it too on the other YouTube channel that I do with one rental at a time. For those of you that are familiar with that one, I talked about this when I first started his YouTube channel back in December of 21, and the market was starting to roll over. In other words, aggressive sectors were giving way to defensive sectors. So growth was underperforming value, discretionary was underperforming staples, and even though the market was hitting all-time highs in November and December. And that was telling me that underlying the market, Wall Street was starting to rotate, getting ready for a down 22, which is actually what happened. But what John Carter said is he looks for two dark blue bars. That's where momentum has shifted. So if one is higher than the day before, it's light blue. If one is lower than the day before, it's dark blue. So that shows that there are 2 consecutive months. Now remember, this is a monthly chart. 2 consecutive months back in November and December of 21. Momentum was declining. So that just confirmed what I had already seen. And certainly the market fell from there. And then it continued to go down. It was a bear market all of 2022. It started to come back up actually in October of 23. It bottomed, but the momentum really didn't shift to positive until March of 23. So that was the confirmation that the bottom was in and that momentum was starting to shift. And if you wanted to wait for two of them, then you'd wait till April. And then the market started going higher. And look where we are right now. Oops, let me get back. Right now, there are no dark blue bars. So we are in December right now. So December is not finished. So December certainly theoretically could end up with a dark blue bar. Momentum would have to go down below last month. And then we get a dark blue bar. But right now, it isn't showing any signs of slowing down until we get two of these in a row. So that if it's not December, it would have to be January, February. So sometime end of February, beginning of March might be the first signal that the market is getting ready to roll over like it did here. We don't have that yet. So everything right now is very bullish. I'll talk more about that tomorrow. But I also put a chart in here. So if you click on this image on the website, this is on the index page under charts. Let's go to charts at the top of the page. You can see the index charts. And by the way, I update these every week. So you can see how the indexes are moving on a daily basis, including Bitcoin, the Russell 2000, and gold. All of them are there. But if you click on this image up here, it brings you to a long-term chart, and you can see that exactly where that, first we'll look over here at November, December of 21 was right there, where on the squeeze, we get the two dark blue bars, and then we get the third dark blue bar in January, and that also right here was a signal that the market had rolled over, and it confirmed it when the 21 and the 50 crossed right here. Now, interestingly, the confirmation of the uptrend was right back here in March, and it was pretty much exactly the same as the squeeze. So really good confirmation, really good way to just look at both of those, especially if you want to be a long-term trader, you want to get into something and not have to worry about getting out, just not watching it every day. This is a great way to do it. So you would have got out back here in January, maybe even in December of 21, but January of 22, and it wouldn't get back until March. So over a year, you'd be out or short. And then starting here, you would be in. So you would have been in for another year and a half, going on 2 years actually in the market. But right now, there is no indication right now that the market is nothing but bullish. So even though looks like a down day today, it doesn't mean that the market is getting ready to crash. If we go back and look at the dashboard real quick, you can see right there, the Dow is down 178. So the NASDAQ is the worst performer right here. And then the S&P is next, and then the Dow. All of them are down though. Small caps are the only one that's actually showing some life right now, interestingly. And the VIX has ticked up a little bit. So VIX is up almost 10% today. If we look at the sectors, the performing sectors are healthcare, energy, and materials, and real estate. So somewhat defensive sectors are leading, and the ones that are lagging, communication services down here, one of the aggressive sectors. Technology and discretionary are kind of in the middle of the pack. So they're negative on the day, but not significantly negative. What was the S&P? S&P was down 0.59. So that would be, just switched. So everything from industrials lower are underperforming the S&P. Discretionary is slightly outperforming, pretty much flat. But industrials, technology, utilities, all of these are underperforming the S&P right now. The industry groups, you got discretionary, materials, technology right at the top three. And interestingly, it's renewable energy is in the top three for technology. Then we have real estate, mining. Mining makes sense with gold and silver starting to come back up. And then a staples, distillers, discretionary, and materials. So steel down here looks like it might be perking up. Let's look at renewable energies. Renewable energy, that not too impressive right now, even though it did have an up day and its relative strength looks pretty good against the other ones. The overall chart doesn't look that great. Steel too has been underperforming for quite a while, and you can see the downtrend in steel. Had a big up day right here in November, but ever since then it's just continuing to go lower. So even the ones that are outperforming aren't looking that great. And then if we look at my top 10 combined list, these are the ones that this is very interesting. I'm going to show you something here in a second. So these are the ones from the top 10. You notice that none of these are ones that we were in, and we are out of everything except Google. Everything stopped out except Google. So these are the ones on the top right now. And 8%, that this is, if you've been watching the top 10, this is really not that impressive. A lot of times you're seeing 10, 20% gains in one day on most of the top 10 lists, but right now they're about 8%. Just out of curiosity, I wonder what the bottom one is. Kava, yeah, that we got stopped out of that. There's the chart right there. So let me first, before I do that, I want to go back and go to the newsletter. For those that get the newsletter, or if you haven't seen it, you can go to breakpointtrading.net, click in this little box right here. It's free, and the newsletter will download. And this right here, this was from Real Investment Advice. This is a free newsletter that you can subscribe to. I put the link to the whole thing right here, but and I did some excerpts. But this was the interesting one. As of this writing, which was Saturday, S&P is currently up 28% year to date, while investment grade bonds are up only 3.2%. That differential in performance would cause a 60-40 allocation to shift to 65-35. To rebalance that portfolio back to 60-40, managers must reduce equity exposure by 5%. I think that might have actually started. So we'll take a look at some. It's not across the board, however. I think what it looks like to me is they are looking at the ones that have run up quite a bit and reducing exposure to those. So let me show you what I mean. Let's take a look at Kava as one of them. So let's just use this one. So look at Kava. Look at that. Kava's all the way below its 50-day moving average now. That is what I think the portfolio managers are starting to do, taking some of these ones that have run significantly higher and starting to rebalance their portfolios by getting rid of those. Another one was Powell. Same thing with Powell. Like now it looks like Powell's been actually started back here in the beginning of November, but today had a big down day on Powell. we were in this and got out with a nice, I think, 13% gain in about a week and a half or something. And I was thinking about getting back in right here, but thankfully I went to the money show instead, so I wasn't really watching anything and just rolled over and continues to go down right now. So that's looks like it's beginning to happen. And this being the worst week of December, even though December is the best month of the year, typically, this is the worst week. And historically, it doesn't start to perk up until after options expiration. So we've got 2 more weeks really until the Santa rally starts to kick in. Just out of curiosity, and I had not done this yet, but I want to take a look at the top 10 list. And I just want to see who is at the bottom of this list, just out of curiosity. So I want to, let's see. Let me save this. Now let me edit list. And then I'll look at the summary and we'll see who the bottom of the list is. APP, this has been the number one top 10. So if I go back here to the charts page, every week I update these 3 columns, the top 10 lists. I do this every weekend. And these are relative outperformers. These are the ones that have beat on earnings and revenues, both. And these over here are the IBD 50. So every week I'll update these, and notice App Lovin is at the top of these 2 lists. And I also do the large cap, mid cap, and small caps as well. There's Powell over here on the small caps. And Powell wasn't in any other list, but App Lovin was right there. So if I go back to, where is that list? Not that one. There we go. So that one is the worst performer today, down 14%. Kava, 3rd worst performer. SG, one that's similar to Kava. That's down the list near the top of the underperformers. CleanSpark, Credo Technology had a big down day, down 10%. Coinbase, VST, Vistra Energy, just has been consistently higher all year. And now it looks like, portfolio managers are rebalancing. So they're getting rid of the ones that they've got big gains in. Modine has been doing great all year. MicroStrategy right here, big down day on MicroStrategy. Powell, there's Powell. Coherent, another one that's made the top 10 list over and over again, down 6.5%. So my point here is, number one, Palantir. Look at that. Palantir is near the top of the underperformers, down 5.9%. Let's look at a couple of these. There's Palantir, big down day today. So this looks like distribution to me. This looks like portfolio managers are beginning to rebalance their portfolios. There's Coherent, sitting right on this 21-day moving average. Let's look at Powell. We looked at MicroStrategy. There's MicroStrategy, not too bad, but sitting right on the 21-day, and momentum definitely heading lower. In fact, the money flow has been down ever since the 3rd week in November. Money flow has been significantly lower. So definitely looks like distribution. This red line is the accumulation distribution line, and about the same time that money flow went below 0, it's about the same time that accumulation distribution went negative as well. So it definitely looks like distribution. What else? Modine. There's Modine, big down day. Just been going sideways, but it looks like it's giving up. It's had a good year and was sitting right near its highs, but now it's heading down. Vistra. Vistra has consistently been in the top 10. Look at that, higher highs and higher lows, just moving up. Now it's below the 21-day, which happened back here, but we'll see if that continues. The volume looks fairly big. It's 3:30 in the afternoon right now, so we've got 30 more minutes left to the close. Let's look at a couple more. Credo. I know a subscriber had talked about Credo, did well with it on this gap up right here. Still okay because it hasn't got down to the top of the gap, but big down day today. So it looks like that's another one, just like the rest. These have all had great gains this year. Portfolio managers may be starting to distribute out of those just for their end of year window dressing. Sweet green, same thing. Big red candle today. And Kava we looked at before, at 11 at the top of the list. This will be interesting. Not too bad, actually. So top of the list, down 14% on the day. But no, this is exactly what I'm talking about. These are the kind of stocks that are on the top 10 list. This is a great list to use. If you're trading options, you can sort it by ones that are optionable. But these just continually go higher. With this pullback, if this really is window dressing, and this might continue for the next couple of weeks, right into options expiration Friday, this might be a good opportunity to get into some of these because these have all been significant outperformers all year. And back here on this list, I update this every week. You can see the ones that fell off each week, but I consolidate all of these every week and I put them into a chart list. There's 258 stocks in here. So if you want a list to search for opportunities from that are relative outperformers, so these have to beat their industry peers by 10%, and they have to beat the S&P by 5%. They have to do both of those in order to make this list. That's for the week. So this is a weekly rank. This is a weekly rank too. These are the ones that have beat earnings and revenues, both. And this is the IBD 50 over here. So this list contains some really good companies, and it's a great place to start. All that's right on the website. All right, so that's it for today. I'll talk more about the daily scan and where things stand. I will just tell you that Google is the only one left on it right now. Everything else has stopped out. We are at an annualized overall about 4.8% with a 42% win-loss ratio so far. But I'll show you that tomorrow when we do Technical Tuesday. And Technical Tuesday, I think I'm going to, one subscriber talked about moving averages versus trend lines. So I might take a look at both of those and show you, how to use both and which one may or may not be better. I personally think you should use both of them, but we'll take a look at that tomorrow. So anyway, thanks everyone for watching. The Technical Tuesdays, again, is in the playlist on my YouTube page. You can see everything there. And I will talk to you again tomorrow. Good luck trading. Right now, by the way, it's 3:35, just real quick. We can go back and take a look at the market with 25 minutes left to go. And looks like it's going even lower, heading even lower. Let's go to the home page and look at the S&P just for fun. Yeah, it's still at the lows right now. You can look at this on a 10-minute chart, and there you have it. So here's the open today, just continually going lower. Still, it's below its low of the day now, so it's a new low of the day. Momentum is continuing down. The VIX is going up. So all of those things indicate that it may continue lower. We do have, this is a 5 RSI down here. So yeah, there you go. This is the 5 RSI. So that is just beginning to, no, that's a commodity channel, sorry. Commodity channel. So it just might be starting to move back up into the end of the day. This is the 5 RSI. So, all right, that's it for today. Keep an eye out, and we'll see tomorrow how things do. And good luck trading. Thanks for watching.